Day one, beautiful view, but let's get straight to business and talk about inflation.
Absolutely.
Has anything of late changed your view on when we could get cuts?
I think, first of all, I believe it's too early to talk about cuts. I think inflation is still high. The December numbers were higher than the November month. This was not a surprise because of the base effects, but nevertheless, what we expect for this year compared to last year, that inflation will be half of the level of last year. This is good news per se, but as I said, inflation is too high. So for me, all the discussions regarding inflation cuts, this comes too early.
So does it mean that the market are pricing it wrong?
So the markets are, from time to time, they're optimistic. They are maybe, from time to time, they're over-optimistic. So it's their view. I have a different view. So I want to see new data that is kicking in. So we will wait for the next governing council meeting, and then we will see.
But, Mr. President, if there's a mismatch between what you see and maybe a majority on the governing council see and the market see, does it make actually the transmission mechanism harder? Does it somehow impede the kind of work that you're trying to do?
I think it's all about communication. This is what we are doing. I think trying to explain to the markets how we see the world as the governing council. So we addressed it several times that we want to wait for data and we decide from meeting to meeting. And this is still my broad understanding. The latest numbers I saw, the December, I just alluded to these numbers, they are above 3%. So our target is 2%. So this is information. This is something markets should see, this information, and then they can price what they want to price.
So is it safe to assume, because you're so data dependent, that it would have to be that a cut would come when you also have new data, that basically it's on a day with new forecasts or things like this?
I think we do have to wait. I think it's really much too early. So maybe we can wait for the summer break or whatever, but I don't want to speculate. I think this is my understanding here. We should wait for new data, and we are living in a very uncertain world. And we shouldn't forget that 2024 is coming with a lot of challenges, and this will have impact on monetary policy. So I really have the belief that this meeting-to-meeting understanding is the right way to do it.
So, and I know some are expecting, for example, wage bargaining. They want to see that before there's any thought about cutting. Others say, look, it's very unlikely to have second-round effects. Again, when you look at this, and I know maybe for you it's early days, how do you look at wage? Can you give us any steps on how you see this going forward?
I think wage development is a little bit the great unknown. So I think it was unsure last year how things might develop regarding wages, and this is one of the data I would like to see, how wages might develop in the Eurozone over the next 12 months. And there is still something that has to do with the high inflation rates we saw at the beginning of last year. So we will see this more or less there's a time lag behind that, and I think we will see more on the wage side. But as I said, again, we have to wait for the data.
Is there anything that you could see that would make you want to cut earlier? I don't know if there's anything that can change your mind, or for the moment.
I think when inflation is coming close to our target, or close to our 2% target, then maybe I can change my mind. But this is too early. I think my forecast is, or what I see is that we are coming close to our target maybe by mid-2025, but it's a long way to go. And so,
how do you view the Fed? I know that this is an unorthodox question, but if the Fed starts cutting aggressively, what does it mean for the ECB?
I think Fed is doing monetary policy for the United States. We are doing monetary policy for the Eurozone. So yes, we are looking what the Fed is doing, but we have our own story, and this is different.
President, how do you see inflation then behaving in the next couple of months, 6-7 months? Is it going to be volatile, or is the trajectory after the December month going to be to the downside?
It looks like that is, as always, dependent on so many aspects. What I see is that inflation might come down over the, let me say, next 6 months. We will see maybe some volatile numbers at the beginning of this year. I think the December number gave us a little bit one of these indications that it could be also something that could happen in the first 3 months of this year. Then it looks like that the trend shows or gives us that indication that inflation might come down. So on average, as I said at the beginning of the interview, we will see half of the inflation on average compared to 2023.
What's your biggest concern in the next 12 months? I know here we talk about trust, we talk about geopolitics. All of this just seems a lot of uncertainty out there.
I think on the monetary policy side, we achieved a lot. We hiked 10 times, so we gave a clear indication in the Eurozone that we are committed to bring inflation down to our target. So all the geopolitical uncertainties, I think this is really bringing volatility to the markets. Also about trust, it's all about trust. I think this is what we're doing here in Davos, working on that to have a better cooperation, achieving trust. I think this is so important for financial markets, and this is the major challenge I see for 2024.
But so is that also for central banks, that actually it's better to cut a little bit later to make sure that inflation is under control? Do you think that goes to the trust of central banks?
I said this several times. Inflation is a greedy beast, could be a very stubborn phenomenon. So we should be more stubborn on the central bank side, and we should avoid a mistake to cut too early. This was often a mistake that was done in the past, and I don't want to repeat this mistake.
But, so, President, just so I understand, I mean, is it possible that we don't see a cut before the fourth quarter of this year? I mean, would you rule that out?
I don't want to speculate. I wait for the data, so we will see.
When you're here, actually, I know a lot of the talks will be meeting also with chief executives to try and understand, for example, some of, the wages, everything that we talk about. I mean, you spend, 24 hours out of 24 hours thinking about inflation. What do you think the most important conversation here in Davos will be?
I think one of the advantages of Davos is to talk to so many people. Normally, we are talking just between us as in the Governing Council, between central banks. I think here I can find so many people from so many different areas, get different information, new insights, and I will take advantage of Davos, and I will find maybe new answers, new ideas, what I think is important. This is my mandate, to bring inflation down and do the best here.
How much do you worry about the German economy?
I think German economy is not the sick man of Europe. So we had a rather weak 2023, so 2024 will not be a brilliant year, but we will see growth is picking up a little bit. So I think Germany has to do its homework, so we have our structural issues, but I believe the German industry has shown a lot of adaptation capacity, so we will do what is necessary, and then I'm not so, let me say, skeptical about the German economy.